Hey everybody, John King with Summit Funding. It is the last Friday in January, and let me tell you, they are changing, and they're changing quickly. So a couple of things that I want to cover today, three things I want to cover today. The first thing I want to cover is some changes that Fannie Mae and Freddie Mac announced last week regarding interest rates and how they account for risk. So that's the first thing I want to cover. Second thing I want to cover is what's happening in the market. Things are changing, and I'm feeling the change right now. And then the third thing I want to cover is the coffee bean and make sure that you are the coffee bean, not the carrot, not the egg. So I'm going to go back to the beginning. Fannie Mae charges a fee on the loans called a loan level price adjustment. It's risk. It is basically saying, hey, if you got this credit score and this much down, then your risk adds 0.5% in fee to your loan or 0.75% in fee to your loan, which often is actually not charged to you in fee or charged to the client in fee, but is charged as a bump in the interest rates. And it's a little bit more detailed than that, but the general concept is there. Well, they've now increased those fees for people that are refinancing and decreased those fees for people who are purchasing, especially people who have lower credit scores. So there's a lot of changes that are happening that's supposed to be designed to help with people who are low to moderate income earners and are looking to purchase a home to help drive home ownership for them. But for people who are pulling cash out or people who are just simply refinancing, they're making it more expensive on that end. So jury's still out on whether this is good or bad news, but some serious changes. The second thing, talking about serious changes, the housing market, in my view, is shifting right under our feet. So we saw a huge shift in 2022 where we saw interest rates shooting up and housing prices coming down. And we had sellers who were willing to negotiate and they were willing to accept lower than asking price. Sellers were willing to give credits for closing costs. And I said, we're going to start seeing interest rates coming down. And when we do, their buyers are going to come back in the market and the sellers are going to pull back and they're no longer going to be giving those incentives. I'm feeling that change already. This week, I've done more pre-approvals this week than I did in the last 30 days. So buyers are coming back because interest rates have started coming down. But on top of that, what we're seeing much more competition with the number of buyers that are out there on the market. I had a property right now that one of my clients wrote an offer on that they had written a full price offer, but they were asking for a $10,000 credit. The next day, which for the last 6 months, that would have been accepted all day long. The next day, we heard back that they wanted to see highest and best, which means that they wanted they had 5 offers. They wanted every one of their buyers to offer what is their highest and best offer. And on our offer, they decreased the seller credit. So they were still doing a full price offer with no seller credit required at all. Well, what ended up happening is we heard back from the listing agent saying that out of the 5 offers, 2 of them were over list price and they waived all of their contingencies. If you don't know what that means we're back to 2020, 2021, at least in this home, because that's what buyers had to do is they had to waive their financing contingency and or their appraisal contingency and or their loan contingency. And so we're seeing that happening, and I literally just saw it. So this house sold over asking, no seller credits with contingencies waived. That's just one example. I've got 3 other clients that wrote offers this week that got beat out by other buyers. So if you're thinking about buying a home, now is the time to jump in, get yourself qualified, and start looking because interest rates are continuing to shift down. They've been pretty stable this week. The Fed's meeting next week. We expect the Fed to raise interest rates next week, but that isn't going to cause interest rates to go up on mortgages. As a matter of fact, there's a chance they fall a little bit because when the Fed confirms what we think they're going to confirm, that that the inflation problem is getting under control, that actually is what mortgage interest rates want to hear. All right, the final thing I want to talk about today is be a coffee bean. What does be a coffee bean mean? Well, it has to do with how we work under pressure. So this week I had my loan officer retreat, our semi-annual retreat we do for all loan officers in the company. And we heard from a speaker named Damon West. And he co-authored the book with John Gordon called The Coffee Bean. And his story is an amazing story. A lot of adversity that he's overcome, some pretty serious bad things he did in his past. But what he realized is you can't let your circumstances control you if you choose to be the coffee bean. Now, what does that mean? It means if you picture life and the pressures of life as being a boiling pot of water, you have 3 choices. You can be a carrot, you can be an egg, or you can be a coffee bean. Now, what does that mean? It means if you're a carrot, Without pressure, you're hard, you're strong. But as soon as you're put under pressure, as soon as you're in a position where you've got stresses on you, like the hot water, a carrot turns soft. You start getting sad, you start getting depressed, you turn soft under pressure. You can then choose to say, you know what? No, I don't want to be a carrot. I want to be an egg. Well, an egg, before it goes into hot water in its normal state, is hard shell on the outside, but super soft on the inside. Very loving and caring and giving. And once you put that egg in the hot water, guess what? The inside of that egg becomes hard. It becomes angry. It becomes mean because that soft inside went away and you turned super hard in the pressure of water. But what happens to a coffee bean when you put it in a pot of boiling water? Nothing happens to the coffee bean. What changes is the water. The coffee bean changes the water into something called coffee. So you have a choice. When you are under pressure, you can choose to let it change you by either making you sad and depressed or turning you hard, mean, and angry. Or you can choose to say, you know what? I'm going to be the coffee bean. I am going to impact change on those around me and not let them change me. Guys, I hope this has been helpful. Continue to subscribe, watch all my stuff. I look forward to continuing to advise you. This market is shifting. We're seeing lots of changes, and I hope to look forward to being your advisor and helping you through your mortgage journey. Thanks and have a wonderful week. Go Niners. Bye-bye.